Thank you very much for attending today's webinar. We're of course looking to this week starting the 25th of September 2017. We just had the German elections, markets largely kind of digesting that. We've also just had news that there's going to be a snap election in Japan, so a bit of reaction in the yen. We'll certainly look at that yen chart. Bit of politics in the UK this week as well. We've got the party political conferences, so anything ridiculous coming out of there, which we've already started to see a bit of. John O'Donnell from the Shadow Chancellor has said that Labour would like to privatise construction. So a few interesting things being said, some more conceivable than others, but nonetheless certainly worth keeping an eye on. And of course, keeping the theme of politics, this weekend it looks like we're on for a independence referendum in Catalonia in Spain. So yes, probably explain some of the euro weakness, which we'll probably dive into straight away here. So without further ado, let's have a look at some of these charts. Hold on. Okay, let's get this full screen. So starting with the euro here, this is our weekly chart with an uptrend intact. And of course I should mention if there's any questions at any point, please let me know. I'm assuming that you can all hear me. Is that the case? I never actually did the sound check, so I'm hoping that's the case. No one said otherwise. Okay, perfect. Yeah, so here's the case. Here's my take on the euro at the moment. We've obviously seen 2 weeks of declines. Last week finished well off its highs. We basically tipped the previous week's high and then ended the week lower. So the general trajectory in the short term is down, yet I would still categorize this as a pretty firm uptrend. I'm not sure there's enough that really gives me confidence to want to become a heavy seller here in the euro. If you are a very short-term trader, I would say the path of least resistance in the short term is down, but it's just very hard to tell when that will end because it is a pretty strong uptrend on the weekly chart. As you can see here, we're above the 20-day moving average. Now there is some room for mean reversion, moving back towards the mean, back to the average. There's certainly scope for that because we've had a big jump higher. But I think limited, probably. If we jump down to the, and of course we're still making higher highs, we're still making higher lows. So we'll see how this week ends, but really we have to drop down somewhere through below 117 to be making a lower low, and we haven't made a lower high yet. So to me, uptrend intact on the weekly chart. Looking down at the daily chart here, we talked about it over the last couple of weeks. There's consolidation here, a 200 pip range, which is I was talking about last Monday. It's still intact now. We're attacking the bottom of this range here. We obviously failed at the 20-day moving average, ended off the highs on Friday, tried to push higher earlier today, and failed at the 20-day. So it looks to me like we're going to take out the 50-day moving average here, and it looks like we're going to take out these lows here. That's how it looks to me, with this trend line being taken out, the failure at the 20-day moving average. But again, just probability is just not quite on your side when you just see such a strong uptrend in place. You know, you're basically trading a reversal, which doesn't have as good of odds of success, although potentially the reward is larger if we get a beginning of a bigger pullback here. My sense is that the first testing ground for any decline will be the 118 mark, and then finally the 117, which does capture these lows down here. So I'm not convinced at this point that we can go much further than that through 117, or should we somehow in the move lower produce a lower high on the weekly chart, then I would perhaps be a bit more bearish on this. So it's one of those moments really where the short-term trend is opposed to the long-term trend that eventually presents an opportunity, but I just don't see that opportunity presenting itself just yet. Weekly chart for sterling. we took out this big level here that we'd highlighted before, the 50% retracement of the Brexit decline, and the 135 mark, as well as these peaks from 2016 after the initial Brexit drop. We basically broke above and we paused right at that line. So at the moment, for me, this just looks like a very reasonable test of former resistance, and now it's a successful test as support. I'm looking for prices to move higher from here. But this 134.50 basically is pretty much the line in the sand. As we talk at the moment, we had a big push higher earlier in the day, but we're right now down at lows for the day. So, you know, we're consolidating basically at the moment, 134.50 to a sort of 136.50 and change. You know, if we broke down through this level, I would imagine we come down and challenge this 133.20, or indeed these former highs here at 132.60 would be the kind of natural levels of support that I would expect to come into play. And even if we do knock through this level, which, you know, I wouldn't be surprised if a few stops are gathering down here and there's maybe an attempt to run through those stops before we can push higher. If were that the case, then maybe we're down at 134. So watch 134 first, then watch 133.20, and I think then watch 132.60 with a mind that we're in an uptrend really. We're broken above long-term resistance, moving averages pointing in the right direction on the weekly and the daily chart. Euro sterling, worth touching on base on this as well to get a sense as to how sterling in general is doing. We've got a little kind of triangle pattern forming at the moment. We've been unable so far today to break through the bottom of that triangle. So big breakdown from the uptrend. Moving averages have fit into line for a downtrend on the daily chart, but on the weekly chart, obviously, we're actually kind of coming into moving average support and some former areas of resistance around this sort of 88 mark. So that's why we paused here. But the strength of this move lower, the fact that we came off this big long-term resistance so cleanly, to me suggests we've probably got further to go to the downside. So in the short, you know, for the time being, the thing to test for me will be this little rising kind of triangle-y looking pattern at the bottom. If you feel so inclined, you could draw a little line through the highs here and you can kind of see what's going on. We're consolidating. We could drop through this line, false break, could pop up through this line with a false break, but I think at the moment this pattern is this consolidation is quite well defined. Obviously, if you think that if you think we've put in a low, then, you know, we're right on this trend line support. If we drop through the trend line, you know, you've got a well-defined risk. To me, it looks more like a consolidation pattern before a move lower than a reversal at the moment. Dollar yen, obviously interesting in the context of this snap election being called in Japan and the implications it has for the Bank of Japan policy. I've just written a little bit about that in an afternoon note. Be sure to check out that on Twitter and on the website shortly. Let's first things first, let's go to the weekly chart here. So we highlighted at the end of last week a big bullish engulfing week. We said it's within a range, but it's quite significant, and we thought that was a kind of bullish development. I thought there might be more of a correction down to the downsloping trend line, or even down to these kind of highs down here, or opens and closes rather on a weekly basis down here. We didn't at all. We pretty much pushed higher from the start of the week. We pushed above 112, and that's kind of where we find ourselves at the moment. To me, still looks relatively positive. It could change, but I would say it could change because of this election news, but we knew there was a likely snap election coming, and I think that's part of why we pushed higher in the first place in dollar yen. Yen was weakening on the idea of a snap election, and it's almost like a buy the rumor, sell the fact idea, I think, at the moment. We now have the fact that it's probably going to be late October when the actual election takes place, Japanese Parliament breaking up on Thursday this week. What do we have on the daily chart? Well, we have a bearish engulfing candlestick here. This is a bearish pattern. We had an inside day. We had a push through the top of the inside. We haven't closed today. So we potentially a little kind of fakey break before a push lower, or the other way. Right, we can't tell which way it is at the moment, so we'll get a better picture for this at today's daily closing price. To me, the uptrend is intact, but you know, we are still really just within a range, so if we pull back from within the middle of the range, that would not be uncharacteristic whatsoever. So I think you would just be a lot. I thought there was going to be a pullback to this trend line last week. We didn't. We kind of just pushed straight to the top side. So maybe this week is when we get that pullback. It's starting to look a little bit like it now. That would just be, it's not to say that you trade the pullback to the downside. It's just that maybe there's a chance to buy again into that bullish engulfing on the weekly chart. Move on to indices. Starting with the FTSE. Basically, it's all about the 7300 for me. I've mentioned it in probably 3 week ahead videos in a row now. What are we looking at here? We're looking at still a bullish trend according to weekly moving averages, but we're putting in lower highs and lower lows. So all the indications on the weekly basis are not positive. In fact, there's really only one remaining positive. We've taken out some kind of resistance as well. We're down through the 50 level on the weekly RSI, and so the thing is, obviously, there's always a hesitancy about selling stock markets because they've just been on a pretty resolutely solid uptrend. You get sudden downbursts, and then that's it. So almost by the nature of it, you kind of have to sell the highs, hoping for that big downturn, because they don't last that long. If you wait for the big downturn, that's normally by the time it's happened 1 week. That's the bulk of what you get. I'm just looking at these sudden bearish engulfing week here, rebound. Big week down here, a little bit of extra, and then rebound. You could look at all these kind of weekly moves. Little bearish rebound here, didn't make it all the way back, so hence we've dropped through the support here. And basically at the moment we're just trying to see whether we can push back above 7300, or whether it's what was quite solid support turns into resistance. So we closed last week pretty much bang on the 7300 mark. It looks like to me that we would roll over again to the 7100 mark, but it remains to be seen. So if I do drop down to the daily chart, again you can see we had that bullish engulfing candle. It would be if it was at the bottom of the trend. Obviously it sort of is. So pushed us neatly into that 7300 region. And we're oscillating around there at the moment. So if we do see some sort of decent bearish looking pattern today, maybe just even an inside bar with a bearish follow through the following day, Tuesday, that might be enough to give us a sign that there's that the 7300 is holding as resistance. So again, hesitancy, to summarize, hesitancy about selling the stock market, but bearish trends developing on the weekly chart, and a very choppy downtrend here on the daily chart. German DAX index, Germany 30, obviously interesting in the context of the German election. With a big breakout, as it just looked like Merkel was probably a shoe-in by the rumour. Are we looking at a sell the fact kind of situation today? Well, the market is higher, it's off its highs. Merkel didn't do as well as some had hoped. The Populist Party did much better than expected, going to have a pretty good showing in Parliament now for the first time since World War II in Germany. So that's quite a big deal, bit unsettling for German politics. Is it enough to outweigh the general bull market in stocks and any influence from the euro? Probably not. But maybe does it add to concerns about buying European stocks when the euro is rising? Yeah, potentially here. So I think probably this result, if anything, has increased the chance that we can't get through the highs here around that sort of 12,900, just below the 13,000 mark in the DAX. But all that said, 20-week moving average has flattened off, but we have pushed above it in price. I would say that's overall bullish. We're still in an uptrend. We've made a higher high here on the weekly chart, and if we drop down to the daily chart, it's a bit of a kind of overextended rally to the top side, but nonetheless we are making clear higher highs and higher lows, which would make me more inclined to be a buyer than a seller here. Look out for this kind of pivot area here around sort of 12,350. We did quite a big pullback for that to be happening. So 12,350 is an obvious area on the price chart for me because it's these two lows here, these price highs down here, and in fact where we got that breakout just a couple of weeks ago. So that's sort of 12,350. But maybe, you know, if the market is feeling confident enough, just look around the 12,400 mark. Maybe the buying starts there. Wall Street, you know, resolutely positive still. You know, the uptrend line is intact. We're hitting higher highs and higher lows on the daily chart, and you know, all pretty tickety-boo on the weekly chart too. You know, moving averages in line, high highs, high lows. You know, still, you know, how long can this market go on? Well, no one can really know. You know, what's it going to cause it to roll over? Well, I can give you any number of possibilities, but you know, no one truly knows. I think we've got to follow the price action as traders. We've got to follow the price action to the top side for the moment. Looking a bit overextended, so maybe we find some support at the old high here at 22,170. But I think if we did get that back, that far, certainly we're watching that level. But I wouldn't be surprised to see us kind of dip down more towards this zone here, which would be this sort of 2250, a bit above 22,000. Might be a kind of big round number that people look to buy into again. Because again, we're a bit overextended. So 22,000, big support. But you know, if we just go for a little dip, you know, then obviously, you know, from here, the next round number is just 2,200. So if the market does get quite aggressive at that point, yeah, that might be a buying point above this previous peak here. So watch 2,200 is the round number, then just below it, where we've got the high here of, where is it? 22,178 on our charts. So that kind of would be maybe a first area. And then this zone here, 22,030 to 22,050 would probably call the round number. So Brent, very much off to the races. We obviously had the OPEC meeting on Friday. General idea is that it looks like we're probably going to get OPEC output cuts extended past March. So that should mean a lower supply in the oil market. We've obviously just had all these hurricanes, which has been affecting supply as well. And reportedly, demand is picking up this year as well. So obviously, the demand-supply imbalance looking very much like positive oil price at the moment. And we highlighted last week about this big long-term breakout, and it's, you know, I think the market's paid attention to it so far. We've had, you know, 4 successive weeks of rising prices now. But that said, it's a very choppy rising trend. To me, this is a positive sign that we've broken above this declining trend line. Moving averages all, yeah, they're slightly out of line, but they're moving back into line, rising. But I wouldn't be surprised to see some reaction, because this is pretty strong resistance into 58. So I think we're right about where we are, 57.30, you know, which is where we've got some of these peaks in here, up to the high here at 58, before 58.50. It, you know, wouldn't be too surprising to see some pullback in the market. Hard to tell at this point if we just correct all the way down to sort of 47, 45 again. I would say, given the fundamentals, I'd be tempted to think that this and the break of this trend line, of course, I'd be tempted to think that this is more sustainable. But maybe we need a proper retest of this declining trend line first. Last but not least, gold. So at the moment, looking all right. You know, we dropped through the 38% fib, We basically dropped through the 1300, the 1295 support, but we've basically held on to the 50-day moving average. So, you know, obviously the market looks stronger if it rallies ahead of the support, not below the support. But at the moment, the market's pausing a bit. I said in the week ahead video that I think probably we can drop through the 50-day moving average. I'm not seeing anything yet that really dissuades me from still thinking that. A little bit of a false break to the downside here. Anyone trading short term may have been caught out this morning with a little kind of push to the downside, which we're now rallying from. But I think maybe just look at this 1305. Maybe get a little push above 1300, 1305 was those old lows. Maybe that's enough to then send prices back down again. It's still a fairly bullish alignment, but you just got to look. If I pull out to the weekly chart, just to put some kind of context on the way gold's been moving of late, big surges to the top side, but then quite sustainable downdrafts as well. So we had a big old move to the top side. It's been, particularly more recently, it's been correcting almost 100%. So more than 100% there, a little bit less there, but of the big moves to the top side. So to see some bigger drop back, maybe back down to the 1260 level that we've referenced lots of times, to me seems like a possibility. Even just the 50% pullback here, maybe that's a little target to wash out a few people that were buying at 1300, a few of the kind of weak hand buyers, and then before it maybe picks again to the top side. I mean, I think the moving averages say higher prices, the higher lows, higher highs say higher prices just about, but we've got fairly hefty resistance above, which to me suggests maybe a bigger pullback first. Right, so yeah, I'm going to leave it all there, I think. Thank you very much for everyone for attending. That's pretty much our technical rundown for this week. Hope it was useful, and good luck trading. Jasper signing out.